Hey, what's up guys? It's going to be a lower effort production value video. Yes, I used to work at a hedge fund and I have a lot of thoughts on this whole issue. So first half of this video, I'm going to be going over, GME, Wall Street bets and exactly what happened. And then in the second half, I'm basically going to explain what my thoughts are on the whole thing. I've got my more polished written thoughts in the article in the description. And the thing that's craziest about it is it really doesn't even matter what the truth really is. Because at the end of the day, the fact that this could even happen or even appear to have happened is an issue. Hope you guys enjoy kind of the stream of consciousness here. So I used to work at a hedge fund. This video will go over everything that happened this week, the major issues that came about from this, and how we can solve this and stop this from moving forward. Because if we keep getting hit by the same things, the same issues keep popping up with our financial system, and we're not learning and growing from it, then we have a bigger issue. So Wall Street Bets. This is a Reddit forum where users come in and they talk about the stock market and they post stocks and they invest in the stock. But unlike our investing, these guys aren't claiming to be good. They're claiming to be degenerates. They're claiming that most of them are idiots, which I don't actually think is true, but sure. A quote on, they literally explain themselves as 4chan found a Bloomberg terminal, which if you know anything about 4chan, you know it is both the darkest and most horrible part of the internet, but also the best and glorious, and I miss it. So just imagine all the characters on the internet you've ever interacted with started playing the stock market and then posting about it. And it goes exactly as you'd expect. With the internet and commission-free trading platforms like Robinhood, it's easier than ever for anybody to be able to enter the stock market and begin investing. Robinhood in particular is one of their favorite places to do this because the whole platform's thing is let the people trade, and we're here to democratize finance. Their target audience is retail investors, aka Wall Street Bets. So something important to note is, well, why can Robinhood offer these commission-free trades? Why is it so easy for anyone to make a trade? Well, Robinhood actually gets paid for order routing or payment for order flow. They sell users orders to a market maker, or basically another broker, who actually executes the trades for them. Why would that broker ever want that data? Unironically enough, payment for order flow actually started off with Bernie Madoff. Yeah, the Ponzi scheme guy. So it's routed to a broker, they make the trades, and let's say I buy a stock for $26, it gets to the market maker, and they actually sell it for $25, they pocket the dollar difference. This is one way they can make money. Obviously, there's more to it, and Robinhood's gotten in trouble for this thing called best execution, but that's a whole nother story. People talk about how insider trading is bad. The thing that the traders told me that they were most afraid of was getting in trouble for best execution, which is if they don't execute at the best quality price they absolutely can. One of Robinhood's biggest clients is this market maker called Citadel. Robinhood makes most of their money from this company, Citadel. And this is important in a little bit. So one such Wall Street Bets user was named Deep Fucking Value. Yes, Deep Fucking Value. And he starts posting about how he's long GameStop because YOLO. He takes $50,000 of his life savings and dumps it into GameStop. Fuck it. He started doing this back in 2019. And basically GameStop is between $4 and $14 during this timeline. Now, the forum rejected him. The forum laughed at him. They called him an idiot for months. They're like, dude, you're so stupid. Like, normally when Wall Street Bets people call other people idiots or degenerates, it's usually a compliment. But in this time, they were saying, no, dude, you're actually stupid. You're going to lose all your money. In reality, though, he had seen that GameStop was 140% shorted. He also noticed that GME had a ton of assets, and they got this new guy, Ryan Cohen, to start buying in some shares, and he said he was going to turn the company around, so maybe it actually had some promise. But let's talk about that 140% shorted, because that's the real kicker here. And it wasn't just GME that was shorted. It was AMC, BlackBerry, Express, kind of these old brick and mortar retail companies that were kind of going out of business due to the pandemic. So what does it mean when you're 140% shorted? Why is that a big deal? Shorting is when you borrow a stock from somebody, sell it, and then promise to give them that stock back later. The idea here is that you're betting that the price of the asset that you borrowed goes down. Normally, it may also cost what's called a premium to do this. And Frank might say, hey, I'll let you borrow that share, but you got to give me 5% of the price of Apple every day that you haven't returned to me. So I go, okay, cool. Let me borrow the share. Here's the $5, boom, make the trade, and then we're done. Now, this is where a lot of financial pressure can take place. The longer you hold, the more you got to pay Frank his cut, and you still got to pay him back that share at some point. If the price spikes, the amount that I'm paying to Frank spikes. So I'm highly incentivized to cover my position, to buy that Apple so I can give it back and I can get rid of it, right? Now, the other thing is, if I am carrying a ton of a short position, right? If I have 100,000 shares of Apple that I'm shorting, I borrowed 100,000 from him, and I have to buy 100,000 shares to cover my position, that's going to spike the price even more because it creates this huge demand for me shorting. So it spikes the price even higher. Obviously, you have potentially uncapped risk here. If the price spikes to infinity, then you eventually have to buy that stock at the infinity price and give it back. This is what's known as the short squeeze. When the price is spiking and you have a short position, you're being squeezed and you're being pressured to sell more and more. And then what happens is, especially if a ton of people are shorting this position, they all have to buy to cover, and it launches the price even more. So this is something that Deep fucking Value noticed. And that's why he said, fuck it, I'm YOLOing on GameStop. Anyway, so this guy has been diamond holding GME for months now, for like over a year at this point, right? And Wall Street Bets is starting to take notice. He's actually making some gains. Chewy founder Ryan Cohen starts buying up some shares, and Wall Street Bets go, okay, maybe we want to jump in too. So they start buying. It looks like a good stock. They like the stock. GameStop stock starts rising a little bit. And this guy who's been getting shit for YOLOing 50K starting to make a lot of money, and Wall Street Bets starts noticing he's making a lot of money, and they go, oh, we like the stock too, and they start buying in, and that drives the price up even more. So anyway, how can it be shorted 140%? What does that even mean? It means 140% of the shares out there are in short positions. How is that even possible? Well, let's think about it. If there's only one share of Apple on the planet, and I borrow it from Frank, 100% of Apple shares are now shorted because there's only one, and it's being shorted. If I borrow from Frank, but then if Lisa comes along and goes, hey, I want to short Apple too, can I borrow that Apple stock from you? And I go, yeah, sure. And I let her borrow it, and then she sells it. Now it's 200% shorted. There's also this concept of naked short selling, where you actually short a stock without actually having, might be what was going on too, which is very illegal. And if they do find that out, people will get in big trouble. But we don't know. So I borrow from Frank, Lisa borrows from me, 200% shorted. So that's how you can have 140% when people are playing Ring Around the Rosie with their borrowing of stocks. Now, people start learning about how hedge funds have super overshorted this, and this short squeeze could be coming up. Obviously, there's always been the middle class versus the upper class as a power dynamic, as a fight. And retail investors are really liking the idea that they have an opportunity to fuck over the hedge funds. Whereas for years, retail hedge funds, that's how they make their living. That's how they do their job. They look for alpha. They're professional alpha hunters, which alpha is basically risk-adjusted gains over the market. And if they roll over some retail investors, so be it, such is life. But the retail investors are going, we have a chance to do the opposite. We can roll over Wall Street. And they really start liking this idea. So they start buying into it even more. They like the stock. There's no colluding, nothing's going on that's illegal, but shit starts happening fast. GameStop starts going from like $15 to like $350. And these hedge funds are losing money, a lot of money, right? Because they have these crazy short positions. We're talking like 50 billion or something like that. Last time I checked, it could be more, could be less. Now, as this number starts to go up and these hedge funds start to lose money, some weird stuff happens. The Wall Street Bets Discord gets shut down for a little bit. The Wall Street Bets subreddit gets shut down for a little bit. The hedge funds are sweating. They've spent years of their lives learning about how the market works and how to time the market and how to capture alpha from the market. And they spent hundreds of thousands, millions of dollars to get this information. And retail investors are lamowing and beating them at their own game. And Reddit is absolutely loving it. It's like if you were an NBA basketball player and you had a game where you played a bunch of guys who've never played an NBA game in their life. They just play pickup and they're just doing ridiculous trick shots. All of them are draining and you're getting your ass destroyed. That's what it's like. And they're laughing the whole time, calling themselves idiots and how they suck at the game. So one of these hedge funds, Melvin Capital in particular, is very upset because they had a very aggressive short position on GameStop. Now, Citadel, who we recently talked about, Robinhood's main client, has invested a lot of money into Melvin Capital to make Melvin Capital work. So Melvin Capital is very upset. Melvin Capital's daddy, Citadel, is not so happy that Melvin Capital is getting its ass handed to it by a bunch of degens on the internet. And it's paying money to Robinhood that's enabling this. So there's a huge conflict of interest right here, right? And this illustrates our first point. The same group of people who are selling a stock, also the people who are betting that it goes down. Huge, massive conflict of interest here. Right when the going gets good and Reddit feels like, they're finally winning. They're finally beating the hedge funds at their own game. The rules change. They feel like the rug gets pulled out right from under their feet. Because when the big guys fuck you over, you dumb. But when you fuck over the big guys over, you done. Robinhood and the entire industry stop allowing buys of GameStop. And not only this, but not only can you not buy, but they allow you to sell. And if you know anything about price dynamics, if you can buy stuff, that makes the price go up. If you can sell stuff, that makes the price go down. So now you can only make the price go down. And then reports flood in of Robinhood actually selling people's positions with a little note saying basically, hey, you dumb, this is for your own good. Everyone starts thinking that this was a targeted strike from Melvin Capital and Citadel because Melvin Capital is saying, hey, you need to shut the shit down right now. Then Melvin Capital and these other hedge funds can cover their positions at less of a loss. This is where the other issue comes in, transparency. We have no idea what's actually going on with all of this. It's super confusing and hard to know what's really going on behind these closed doors. The other massive thing that we see here is, again, we have a free market, but if somebody can twist a handle and that free market gets shut the fuck off, I don't really know how free that really is. So this brings us to issue 2 and 3, transparency and a huge power disparity. So Trump starts tweeting, AOC starts tweeting, Ted Cruz, Mark Cuban, Gary Vee, all these celebrities and experts and analysts and politicians, they all start tweeting and they're all raging. They're all blowing up. This is unacceptable. This is wild. This is crazy. And the world starts paying attention to the battle between these retail investors and the big hedge funds. The internet blows up. I blow up. It looks bad. It doesn't look good. It looked like Melvin Capital called Citadel and told Robinhood to shut that shit down because they were bleeding so hard. Now this shows another issue with now again, at this point, everyone's just looking for answers, right? There's probably a good reason that this all happened. We don't know though, which shows another issue. Not only is this power disparity so insane that people can just turn off a free market, but there's no transparency here. There's a huge lack of trust with the system in general. They don't even trust that they're doing the right thing. It doesn't matter if it was good or not. It shows how insane the lack of trust in the system is and how crazy the power disparity is. And this is why people are so upset. They feel like the narrative to what Robinhood and these corporations are saying, yeah, you gotta pony up the dough to do this. But it still shows a huge issue with the system as a whole, a number of issues with the system as a whole. And it shows that we're still running on the same broken ass rails that we were running on in 2008 when shit hit the fence. Look, in every industry, there's good and there's bad. And hedge funds is the same thing. I've met a ton of wonderful, phenomenal people in this space. And I've met a ton of not so phenomenal people in this space and really crummy, shitty, terrible people. And I think that's a conversation for a whole nother topic piece. But at least for here, we see there are some major issues where it doesn't even matter what the class disparity is. It's clearly just the power disparity. And maybe that's a result of the class disparity. I don't know. But we know there are systemic issues that we can and need to change. The transparency in the market, who actually controls the market, and the fact that there's centralized authorities that can turn off the market whenever they want. The markets clearly aren't exactly free when a lever can be flipped and all of a sudden all of GME or the vast majority of GME can't be bought anymore. Settlement periods are ridiculous. They're a joke. And this huge conflict of interest where we can even think or start to conspire, both the people selling you the stock are the same people that are betting that that stock is going to go down, seems to be an issue. And the lack of the trust overall for the system. We know we have to put our faith in these big companies, in these brokerage, and the fact that we can't, and we know we can't, is an issue. Luckily, we are in a crazy time, and we finally have an opportunity to re-landscape and fix all of the shit that the legacy financial world has been dumping on us for years. Yes, there's always going to be issues, right? There's no perfect system, but we need to be better. 2008, it seems like we learned nothing. Now we're being given an opportunity saying, hey, next time financial ruin comes, it's going to be a lot worse. This is our get out of jail free card, right? This is why I got into the industry that I'm in. This is why I changed careers. This is why I started writing about this over a year ago. Every time you feel pain, that's improvement. That's an opportunity for improvement screaming to come out. And we as a community have an opportunity for improvement to come out. Look, and say whatever you want to say, like say I'm biased or whatever. But the reason I left the world that I left to get into this one was because I saw the future that I believed in and that I cared about. If you've ever read Flash Boys, it's a fantastic book. It talks about the corruption of Wall Street and high-frequency traders and how they were front-running and doing all this really shady, horrible shit. And a bunch of hedge funds actually got pissed about this, and they made a lot of noise. And we're still running on nearly the same rails. I mean, we have more regulation, which is great. But at the end of the day, we still have this same broken-ass system. So when I started getting into cryptocurrency and I started learning about decentralized exchanges, right? A stock exchange that isn't owned by a single entity, that's owned by the people, I was like, that's yeah, okay. Yeah, sure. And then getting into it more and more and realizing, holy shit, this decentralized, trust minimized, transparent system actually exists. All this order routing, this payment for order flow, and all these high frequency traders and yeah, there's still issues in the cryptocurrency exchanges, 100%. There's always going to be an issues, but at least we're getting rid of all this centrality and lack of transparency on a blockchain, on a decentralized exchange like Synthetics, like Uniswap, like exchanges that already exist right now. Nobody owns it, and nobody can shut them off on us. If I want to trade ETH for like GameStop equivalent on crypto, I can, and nobody can stop that because the exchange isn't owned by anybody. Everyone has to play by the same rules. The current system is not fair, and because it's not fair, people are getting run over. So we need to move to a more fair system, and blockchain is that answer. This is why I got into it. And I mentioned it's also faster and cheaper. We're talking about these 2-day settlement periods. Are you insane? All you have to do is add a couple zeros to another bank account and subtract them from my bank account. That's it. That's all that's happening. Why does that take 2 days? It's because our current rails are old and busted and we need to move to the new ones. Now, DeFi or decentralized finance and this idea of a truly fair playing ground is still in its infancy. And if everybody from Wall Street Bets joined DeFi right now, the system would not be able to handle it very well. But it's constantly improving and constantly getting better. This is a world that we need to live in, that we need to start living in. And protocols like Synthetics, like Chainlink, like Ethereum are building a world that's more fair for everybody so that shit like this doesn't happen every 10 fucking years.